Okay, so let us start off with strategies. Let us start off with straddle charts. Okay, I usually explain this with Keltner channel 53 exponential. Kindly mute everybody who is not muted, so it will be better. Yeah, thank you. I usually describe this with Keltner channels 53 and exponential because you need some trend-based indicator, because here for straddles or strangles, what we are doing is we are following a trend. We prefer, I mean, for short straddles, we prefer that this price, which is the combined premium, it keeps going down. So if it has to keep going down, then we need to follow it with some kind of trend. You can use Keltner channel. You can use there are strategies that have used VWAP. So VWAP also is there. So of course you would have to adjust the time frame a little bit if you have to use VWAP, or it depends. I mean, whatever indicator you want. The people use RSI, DMI, lots of things, moving averages. So you have to settle down on something. For me, the preference is Keltner channel, and the time frame used is, if you are trading intraday, you would have to use a very low time frame, because otherwise what is going to happen again in this, the width of the Keltner channel is going to be important, because you have to, wherever you are initiating, suppose you are initiating a trade at 9:30 in the morning over here, then your stop loss is going to be here. So are you going to be able to withstand this stop loss is the key thing. This is 260. You are initializing it at 183. So it is huge. 80 points difference. 80 points different SL is. Of course, this is going to go down quickly, and your SL is going to come down very quickly. SL, or I would say, if not SL, this is going to be an adjustment point. But then if you are talking about intraday, then this is from here to here is 1 day. So this time frame is more, I mean, if a bit high even for intraday, because if you are initiating here and then your adjustment point is above this, then there's no adjustment here, but you are ending up in loss. I mean, it's not a big loss, but still it's ending up in loss. So you would have to drop down your time frame and then decide on a lower time frame. So you get adjustments quickly before it goes out of hand. So that is the thing you would have to do. Go for 1 minute, 2 minute, whatever, but you would need adjustment points more manageable. Basically, it would be like this. So if you are initiating here at 9:20 or 9:25, whatever, here once the price breaks above the Keltner channel, you will have to adjust your trade here. Now, how to adjust, we'll discuss. Let me set this, make it a straddle here. So this was the example we were looking at. Sorry, I think this was the one. Yeah. So basically you initiate here, and then this is going to be adjustment point. Here you have initiated 311 and 323 is going to be the adjustment point here. Now whatever your trend indicator, you're taking moving averages, you're taking VWAP, whatever, once it is taking a trend in the opposite direction, because this combined price should not go up, because then you will be in loss. So once it goes up, then you need to adjust. So here adjustments are going to be like it now depends. Now there are different ways of doing. For positional, I'll tell you how to do it, because you can just move the strikes around. For intraday, it may not make sense to move strikes around, because there's not much time intraday. You would have to quickly try and capture profits, which could be due to time decay, has to be due to time decay. So there may not be much chance to move the strike around. What people do is, if now once, kindly mute please, whoever it is. So whenever this is getting triggered, there are whichever side, if the price is going up, then what you would do is you could, one way of doing it is you could add lots. Now here, let me check. This was 21st in the morning around 10:20. Futures chart. '21st morning. It's going up here. It's going up. So you would adjust. One way of doing it is you would, okay, let me check what was the opening price around 17.2. Yeah, 17.2 is fine. So you could add one more lot here, which is one of the ways of doing it. So 21st, let me set the preference so the time frame doesn't change. So here, once you add a lot, this is where we were adjusting it around 9:20, somewhere here. So the idea is always for straddle to bring, if the price is going up, bring it down, bring it below the bands. So the idea is to stay below the bands for this. Now, this was one way of doing it. The other way, that this is much better in positional. The way of doing is you move the stressed strike, which this is the strike under stress now, because price is going up. So call, you would have to, it is under risk. So you would move the call up a little bit. Not many would like this because losing side, you are basically booking profit and moving the call strike out. But you can do this as long as the put strike has not lost too much value. So you could move. This is where we have adjusted. Okay, this is where we have adjusted. Either this, or even you can say you can move this also. Well, this is basically closing the straddle and moving up. So this may not be a good idea for intraday, but you could do this in positional. In positional, I do this all the time. So a little bit difficult, but adding lots, I think, is a lot more comfortable. This way, after adjusting one or two times, you would get it this way, where it is below the band, and then you can close off around 3:15 or whatever. So the idea is to get the line down. So how you do it is move strikes, adjust lots, and in general, the way people do it is you need to try and keep the premium equal on both sides. That is one way. Or if you have a trend bias, if you want to stay a little bit directional, then you add to puts and make puts a little bit heavier, lot more premium in the puts because price is going up. If you want to do that, then you could do that this way. Make it 2 lots and make sure that this is a little bit more if the price is going up. And then once you see price, keep monitoring the charts. Obviously, in this case, of course, it just kept going up. So does not make sense. But if it is coming down and the trend is going sideways too much, and then the trend starts to move the other way, then you could probably quickly adjust this and get it back to 1-1 and make it wherever the current price is. You can make the straddle over there. If the price is gone to 17.4 or so, make the straddle there. So as far as straddle trading is concerned, there is I have said this before also, there is a very good video of Nikhil Gupta explaining straddle trading, intraday straddle trading. So that is a very good idea. I mean, of course, you don't require charts at all for it. So, but you can take a look. That is a good idea. So basically, the idea is to initiate a straddle at 9:20, and then once 5% on the combined premium is hit. Here, for example, the combined premium at 9:20 is around 480 or so. So whenever 5% is hit, which is 480 plus 5%, 504. So it increases to 504. You basically, whichever is the stressed strike, in this case call, you just cut off call you cut it off, and then basically he has a super trend, and it is of a very low kind of, I think 10 to 10,2 or 10,1 also. I don't remember what exactly it is. You can check the video on YouTube, it's better. So suppose that it's initiated somewhere, adjustment is done here, and then only the put strike is left. Sorry, this is actually, he suggests 5 minutes. So 5 minutes. Well, in this case, it won't get hit. So let me reduce this a little bit just to simulate that. Yeah, suppose you have adjusted it over here. You have done the adjustment here. Once super trend is broken again, here you have closed the call strike, because this call strike, your straddle has hit 5% SL, combined SL, and then you have left put open here. Now you are riding the put here, and then here you get a super trend signal in the opposite direction. So now wherever over here, if you see, it is 17,266. So nearest straddle, which is going to be 17,3. So you close off that put and you initiate a 17,3 straddle here. And then again, you do the same thing. You wait for another 5% SL to hit. Then you again, here price is going up. So when SL hits, 5% SL hits, you close off the call again. And then you ride the put. You go on riding the put until here. Then you again, here the straddle is going to be 17,377. So it is going to be 17,4 straddle. So you switch to 17,4 straddle. So that's it. He suggests that you do this about 2 or 3 times at the most, max 3 times per day. After that, you just stop trading if you get too many adjustments. I think it's quite good. I have tested this for quite a while. I have also live traded it, and it's quite decent. You can fine tune parameters to your preference. A lot of flexibility is there in that. And the main thing is you just need a chart with super trend plotted. And he trades Bank Nifty. His example is on Bank Nifty with 5-minute chart, super trend, 10,1, 10,2, whatever. So that's the way to do it. You can go through that video and get all the rules. It's pretty interesting. So now here, let me go through now this. What would you do if you're trading it positionally? Of course, I wouldn't suggest doing this positionally. I would suggest instead going to Ironfly. So we'll take that example also. But this, just to give you an idea, let me just give an example. Let us take an example, and we'll start off at the worst possible point. So giving an example that way would be interesting. Let us take a recent expiry, 13th expiry. So let us say we are, for the 21st expiry, we are initiating a straddle over here at just before the market close on 13th. I'm taking worst case scenario, so just to see what will be the worst possible thing, because next day itself there is a big gap down. Again, this huge move down, then a gap up, another gap up, and this is the expiry date. So let us see what happens. And 13th by closing time, say 17,511. This bar closes at 315. So let us say 315 we are initiating. The 17,511. So I'll take a 17,5 straddle. And I'll go for 5 minutes. Save it. 13th. I'm initiating the straddle over here, 440. Next day opening, we are 50 points down. 50 points down. So we would adjust. We will wait for the first 5 or 10, 15 minutes, whatever, to over. Either here or here, we will have to adjust it. There's no option. So even if this was we initiated at 440, so either Mute, please mute. So either we are 60 points down or maybe about 30, 40 points down based on where you adjust. And whoever it is, can you please mute? Okay. Yeah, so what the first thing to do is just go to the chart and see we have opened down significantly. So the put strike is the stressed strike. The first thing to do is move the put down. Where would you move the put? This has opened around 17,265. So you would move this to 17.3, nearest, whatever is the nearest. And then you check, where is that? 13th. We are 13th here. And then you check if it comes down. Fine, we are fine with this. So over here you have adjusted and you have brought this over here. So this is fine. The idea is to get the combined price inside the band or below the band. So this is fine. You can go with it or you can take it down to 2 also. So whichever is the stressed strike, I suggest that there are various ways. You can even take call strike down and make this in an inverted straddle, but there is no great advantage to it. So whether you do this way or whether you do that way, it's almost the same, because you are only trying to capture time value, whether you are in an inverted straddle or a normal straddle. It's exactly the same. There is absolutely no difference. So this is the way I suggest. Move the stress strike first, because then this can even go further down and make it more problematic. So we have moved this. Now again here, so we are almost like what, 60 points down or so. And here then we are again here at 382 to 381. At break even, we have hit again this point at 1239 or so on which date? On 18th itself. So on 18th itself, 1239. Basically, just price has gone down further. So next step to do here is to get this down, because this we had already got down, and now this premium would have gone down significantly because there was a gap down also, and then further the price has gone down. So let us get this down and just make it straddle again. You can experiment. You can just get one strike down, or you can get 2 strikes down. It depends. So when was that? 18th, 1240, somewhere here we have done the adjustment here. Again, this has come down here. Now if after your adjustment also it doesn't come down, then you, after moving this, then move this also. Basically, if you are changing both, then it is basically just closing the straddle and reopening it. But if you may be only doing one also, so you will have to experiment. First step was moving the stress strike. The next was moving the call strike, because the premium would have gone down significantly. And on the whole, idea is to get the combined premium below your channels. That's it. Then we adjusted here 320. Hopefully by this day we would be, by 14,230, we would be very happy that we would have recovered almost, because what this is from 443 to 350, almost 90 point we have recovered. But of course, then we had this shock here. And the first thing, hopefully we would be able to adjust here. Even if we would adjust over here after 5 more minutes, we would still be okay. I mean, at least fine. We would overall we would be in loss, but it is still okay. We would still have captured a little bit few points. But the first point of adjustment was here. So not that bad actually. At 3 o'clock, maybe we would not get this price. Maybe we'd exit somewhere here, maybe another 20-30 point slippage, because it was a crazy move. So the idea is, again, by 3 o'clock, you would see is somewhere here. Just a minute. We are somewhere here, which is 17.1. So we'll have to move this down to 17.1 just to see if it is getting in control. We are here. if, of course, if you would have done this, then the next step again, you would have to immediately adjust this and get this down, because that would also not work. Even this did not. So that's the way it is. Maybe you would not have been able to adjust, because 1530, this happened outside the bands when the market was already closing. At 25 you were over here, but at 30 you were here, so you wouldn't be able to adjust. Next day it was okay, but this would be the position you would end up in. And then next day it was just trending down, 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 all the way down. The next point of adjustment was here. 21st at 11 o'clock. 21st at 11 o'clock was here. This bar started at 11, so we were at 315 or so, around 315. Now you would have to just reverse back the whole thing. Now call strike is in stress. You would do this and check. You would also maybe move this also a little bit and check. 21st, 11 o'clock. This is where you have adjusted it over here. Then that's it. You could write down and get a little bit of profits, 215 to whatever, just 15, 20 points, not much. That's the way in general you would adjust a straddle. Basically, it's just moving the strikes around, trying to keep the combined premium in the direction you want, which is down. Of course, what I have taken is one of the most volatile periods. Generally, if the market is steady, like even this, if it is going down and down with volatility increasing, which is going to be again against you because we are in short straddle, but you would be able to manage in something like this, and something like this would be very, very easy to adjust. And this would be very difficult, which is the reason why I have taken this period, because this is one of the worst periods. Gap down, big move down, next day up, a big gap up, 2 gap ups after that. So this is the reason why I took this. So lots of adjustments will be there, but ideally straddle positional is not suggested. I used to do that a few years ago, but I stopped. March 2020 had a really tough time adjusting when the crash started. So after that, just switch to iron fly, iron Condor and all that. Just do that, vertical spreads, calendars, and only those. I've been sticking to that. Iron flies are fine, so we can take an example of that too. So, there's any questions about straddles?
Can I ask one question?
Sure.
Yeah, so always we have to use the monthly expiry for this?
No, this is just the example. You can go with weekly and take a look. It will not change much. We can actually, I should have given the example with weekly actually.
Okay.
So we can do that actually. 21st expiry I should have taken. So yeah, we can
so basically you want to convert to a strangle, or sometime you want to
basically straddle.
Yes.
It's basically all adjustment is that actually. Yeah, the principle is going to be the same, even though it is weekly, the adjustments are going to be almost the same. And you will get a much better decay in this actually. But positional, since I was explaining positional, and positional weekly would be also fine. Yeah, I used to do weekly, so, and it was working out quite well. But I don't suggest this. This is just to give you the concept.
Okay.
So ideally, don't do a straddle.
I thought that you have shown the monthly expiry so that there will be a lot of time for you to adjust.
It is there. That is one of, yeah, you could do that, but no, I mean, the intention was not that.
Okay.
I just forgot to take the weekly expiry, but any expiry, it's going to be similar. The moves are going to be similar. And I think even the adjustments are going to be happening almost at the same time. I don't know, maybe this is weekly is going to be slightly worse because
because of too much of movements are there.
Yeah. So gamma is slightly more so, and especially as you go near the expiry, due to gamma, the moves are going to be a lot more worse. So yeah.
And if I do intraday, it is best to do on Wednesday or any days you suggest it?
It's fine. I mean, if we are doing this, I mean, you can do whenever you want, doesn't matter.
Because Friday or Monday we may not get enough decay.
Yeah,
Also.
that is there. You start on Monday evening or afternoon or Tuesday morning also, it's fine. The idea is to position yourselves and then yeah, make the main capture main decay on Wednesday and Thursday.
Okay, thank you.
Yeah. Any other questions about Straddles? Okay, let's go to Ironfly then. Iron Condor or Ironfly. Let's. Now let us try for the same period, and this time I'll take weekly expiry. Historical. Sorry, 21st, 17.5. Okay, what I do is let me take a look at that. First expiry. Now here, when I'm initiating, hello, was there a question? Anybody? Yeah. Okay, I'm initiating on mute, please, whoever it is, kindly mute. When I'm initiating the Iron Condor on an expiry day for the next expiry, we are taking that as an example. So 17.5 is the at the money. So I'm looking at straddle LTP. So this is 270.82 or something, 282. So round off to 300. So 17.5. So 17.8, that is plus 300 and minus 300. 17.8 and 17.2 would be my strikes. Call strike will be 17.8 and put strike will be 17.2. So this is how I am positioning the Iron Condor. And let me go to 5 minutes. This time frame you can decide based on this gap. If you see market is very volatile and this gap is too much because your adjustment points are going to be these bands. So if it is too much, then you can adjust your time frame a little bit. Otherwise, just go with 5 minutes for positional. So 13th, we are initiating as usual over here at minus 193, which is 193 points credit. Now, first thing in the morning, yeah, market opens big gap down. So you are down what, like 193 to 18, about 27 points down. And now just forget about these two for now, these two hedges, and then you just move it exactly the way we had moved. Now the whole idea in case of for straddle, we had to keep the combined premium below the bands. For Ironfly, since we have hedges, now this is going to be above the bands. The point is to keep the price always above the bands. So we initiated here, it went down below. Now your objective is to get it above the bands using adjustments. Let us check with what we did over there. Same. This was on 18th morning. That's it. It was sufficient. So we are above the bands. Now just sit tight. Your next adjustment was not on the same day. 18th is over. 19th over here. At 3 o'clock on 19th. At 3 o'clock on 19th, when the huge move was there, the 17.1. So this was that move. So at 3 o'clock, we got another adjustment. Now, since we have done this, what we'll do is we'll get this down here. We'll make this a straddle. Exactly the same two adjustments we had done. 19th 3 o'clock. This was sufficient. So this was at 3 o'clock over here. That's it over here. That's it. You won't have to do anything on expiry day. If you get this adjustment here, you can just exit if you want, because you're already in profit. So you would immediately see the difference. We did straddles and we did iron condor. This was comfortable even in a volatile move like this. Kindly mute whoever it is. Please mute. Nobody will be able to hear anything. Mr. Ravi Kumar, please move, mute. Thank you. So yeah, what I was saying is the same volatile move. The difference between straddle and iron fly, you see the adjustments are very, very comfortable. Very comfortable. And in most cases, once you get closer to a hedge, you would not have to do much, because see what is basically happening here is initially you're starting delta neutral, but here once we move this near one particular hedge, your delta is going to be here, we are going negative. And then later, once the adjustments are done, automatically, once we move to the other side, to the call side, the delta is going to be positive. So both adjustments, whether price is going up or down, we'll be able to adjust. Here our adjustments at the end of the day came because the market is totally going upside to the, just going rallying very hard. And then we are actually in a negative delta trade. That's the reason why the adjustment came here. And I would not suggest, I mean, at 1 o'clock on the expiry day, I would not suggest any adjustment. It is not required. Just close off, and probably at 3 o'clock, just initiate next week's Condor and just sit tight. That's it. So, any questions? Straddles versus iron Condor.
Sir, adjustment has to be done above the mean or above the channel?
See, the idea is to, once this price goes below, closes below the lower band.
Yeah.
That is when the adjustment has to be done. For straddles, it is above, completely above.
Okay.
This mean, you can ignore the mean. Mean is not important.
Okay. The band is important.
Yeah. So this is not important. I mean, like I'll change it to white. So you can even forget this. Basically, these lines, the bottom line is important. Bottom line is the one here we are concerned about. So when something like this, it happens below the bottom line, it closes below the bottom line, that is when we adjust. The adjustment would have been here also, maybe.
So it's exactly opposite the straddle.
Straddle, exactly opposite to straddle, yes.
Okay.
Yeah. Okay.
श्रीकांत सर,
yes.
सर एक क्वेश्चन आपसे ये पूछना था मुझे. लेट्स से अगर हम एक मंथली आयरन फ्लाई बनाते हैं, राइट, टुडे इज 24, तो लेट्स से अगर हम मई एंड का आयरन फ्लाई बनाते हैं, उस केस में प्रॉब्लम ये होता है सर कि उसको अगर एडजस्टमेंट के लिए अगर मुझे ग्राफ देखना है, तो देयर आर नॉट सफिशिएंट डेटा इन द कैलकुलेट चैनल कि हम उसको देख पाए. तो उस केस में हम सर एडजस्टमेंट कैसे करेंगे?
अभी अगर मई का इनिशिएट करेंगे तो
यस सर.
कौन सा वीकली मई वाला?
मंथली सर.
मंथली मई में तो होना चाहिए, अगर स्ट्राइक्स बराबर हो.
सर वीकली भी अगर करेंगे तो आई डोंट थिंक कि बहुत क्लियर मतलब हमें ग्राफ मिलता है एडजस्ट करने.
वीकली तो नहीं रहेगा, क्योंकि नेक्स्ट वीक ये वीक का लिक्विड रहेगा, नेक्स्ट वीक का नहीं रहेगा. वो तो प्रॉब्लम होगा ही. इसीलिए मैं बता रहा था कि थर्सडे जस्ट मार्केट क्लोज होने के पहले, यानी कि एक्सपायरी खत्म हो गया, नेक्स्ट वीक का एक्सपायरी कर सकेंगे, या फिर आप फ्राइडे के दिन सुबह में भी कर लीजिए. थोड़ा बहुत तो आ जाएगा वो टाइम पे लिक्विडिटी. लेकिन मंथली का, एक बार मंथली का मैं देख लेता हूँ. 1 मिनट. और ये इसका चार्ज 437 ऑलमोस्ट सिर्फ 750 समझेंगे. हाँ, इस प्रॉब्लम तो हुआ. ये 750 अगर बोलेंगे तो 750 ऑलमोस्ट 79 का आ रहा है इसमें हेज. अब इसमें 79 यानी कि 700 पॉइंट्स, इसमें 700.165 आएगा. एक इसमें एक चीज तो क्लियर है, ये जीरोधा में तो होगा ही नहीं. ये तो ये आपको और कहीं करना पड़ेगा. मुझे भी वही प्रॉब्लम होता है, जीरोधा में तो चलेगा ही नहीं है क्योंकि इतने दूर के स्ट्राइक्स तो इनिशिएट हो ही नहीं पाएंगे। अच्छा इसका तो
राइट सर।
हाँ इसका तो आ रहा है, मंथली का आ रहा है।
ओके।
एक्चुअली आपको ये देखना पड़ेगा,
हाँ
50 वाले स्ट्राइक्स यूज मत कीजिए, तो वो प्रॉब्लम हो जाता है, तो डेटा नहीं रहेगा उसमें बिल्कुल।
ओके।
तो दैट इज वन थिंग। आगे 5 मई का भी एक बार देख लेते हैं, 1 मिनट। 5 मई का अगर देखें तो इसका 450 अगर समझेंगे, 450 600 इसमें प्रॉब्लम हो सकता है। इसमें 17,600 400 और इसमें 400 निकालें तो 16,800 ठीक है। अभी तो है ओके, लेकिन मैंने देखा है, ये आपको जो बोल रहे हैं वो आइडिया है मुझे। अगर आप बहुत जल्दी करते हैं तो आज ये 5 मई का इसमें सरप्राइजिंगली इसमें अवेलेबल है एक्चुअली, लेकिन मैंने भी देखा है कि बहुत बार नहीं आता है। अगर
नहीं
ये
आता सम। यस।
हाँ, तो ये 50 के स्ट्राइक्स अवॉइड कीजिए क्योंकि उसमें तो
ओके।
डेफिनेटली नहीं रहेगा। तो अगर 100 वाले स्ट्राइक्स हो तो फिर आ जाएगा उसमें मोस्ट लाइकली।
ओके सर, थैंक यू।
ओके ओके। और कोई डाउट, एनी अदर डाउट्स इन आयन फ्लाई? द एडजस्टमेंट्स क्लियर?
Yes, sir.
Okay, excellent. So now you have got the general idea of how adjustments are done. So exactly the same way the adjustments would happen for a spread chart. Exactly same. I do it exactly the same way. The spread also is going to be like a iron fly. The idea is to keep it above the bands, not below the bands. And this also you can go for you can even do calendar spreads here. You can do vertical spreads. You can do credit spreads, debit spreads, ratio spreads. Everything is possible in a spread chart. So, and adjustments are going to be very similar. I don't know if you want to try it using the same one. Now here, basically what I do is I use Keltner channels. Whenever suppose this the price is going down and the falling upper band is broken to the upside on this day, for me this is a bullish signal. So at this point I would initiate a vertical spread. And whatever this current price over here around 387, so I would take slightly in the money long and out of the money, slightly out of the money short, and then that's it, take it from there. So here in this case, this is where things got broken. Here price was going up, so this rising lower Bollinger Keltner channel, this gets broken over here. So at 10:30, and this is 15 minutes. So 10:45 close. This is where I would initiate a put debit spread, basically over this side. So and this is at around 17.8, 17.9. So I would initiate some like 18,000 or 18,001 long, and then probably 17.8 or so short, or maybe 17.9 or 18 long put, and then 200, 300 points down, basically short. So debit spreads. Then adjustments after that are going to be the same on 6th. Let us just check this. Say suppose we are going to take 28th expiry. Put long, I would go with 18. 18 short, I would go with 17.9 or something. And this was on 6th, 10:45. This was on 6th, 10:45. This is where I'm initiating. This is where I'm initiating the trade. Now the idea is to stay with this until something like this happens, and then you adjust over here. So here on 8th at 13:40, on 8th 13:40, basically somewhere here, this is where I got adjustment signal. So you would do this. Maybe you can take the strike Oh, sorry. I had to only one strike difference. It should be something like this. At least 2 strike difference. So you have a way to adjust it. So this is where we had taken at 10:45, 91, and here somewhere here at 95. We are in minus 5 points actually, and you got this. So this is where you would take it, maybe take it 1 strike up. So we are getting this closer to the long strike because prices are going up. Even this has not adjusted. Basically, this also did not adjust. So basically at this point, adjustment itself is not possible. You can either, the only adjustment here is going to be another maybe 50 points up, because otherwise it is going to be the same. We can't obviously have the same. But then there is no, if you see there is no, if we get it just 50 points as the difference, then there's no trend as such. That is the issue here. You can do that and just wait for a signal. Then you have got a signal over here. Then you would go for a bullish spread here, which again got negated over here, basically. So that is the basic idea, basically. Now, if you go for a bullish spread, then it is going to be 17 at 18,000, something like this. You would initiate here, but next day itself you got an adjustment, and you just would have to do those adjustments and get it up. The flexibility here is much lower, obviously. If you are trading calendar spreads, you would be able to make lots better adjustments, and you wouldn't even have to flip between bullish and bearish. Suppose let us take the same one, put. And when we got this over here, it was 79. So I would say just at the money, this was 6th April. The expiry after 6th April was, oh, sorry, I would have to go historical. Say 13th April, I'm taking this, and this maybe I'll take monthly expiry. 17.9, and if you want to say stay slightly bearish, you can take this as 18,000 and this as 17.9. Or you can keep same also, 17.9, should not matter. This was, when did it, at 10:45. We initiated over here. The adjustment was over here, same 7th at 240. We got the adjustment here, over here. It has still gone down. So what you can do is, there are 2 things you can do. You can get this down further, or you can even get this down further. This is not a good idea. So we'll have to keep this. Same, get this down. Where are we? 17.7. So you can try with 17.8 first, or you can go with 17.7. Okay, this is fine. This is where we did the adjustment. 1440. This is where we did the adjustment. This next day again we got the adjustment over here at 12.25. 8 at 12.25 over here. Now we have to retrace back. Same what we did. We just retrace back again back to 17.9. This was on 8th, 12:30 approximately. 8th, 12:30 approximately. And this is fine. You can keep this, or you can go even further. As long as we are within the bands or above the bands, we are fine. You can even go to 18 calendar also, it is fine, but this works fine. And then you get the next adjustment on 11th market close, near the market close, 11th near market close. Again, we are down. We got the adjustment over here. So again, we get this down. We are only changing short strike here. We have not changed the long strike over here. 11th market close, again, you got adjustments. We have gone down again, 17.7. That's it. After that, there's no further adjustment. When was that? 11. After this, no further adjustments here. You just exit the trade over here. You could do this. So the idea concept is the same. For straddles, ironfly, and Condor ratios, if you are using this option strategy charts, the idea is to keep the price in a trend. Basically, whatever price of your spread it is, the idea is to keep it in a trend so you can capture the profit. So how you adjust and all that is basically by moving the strikes. And same goes for nothing different. I won't go into this because it is going to be exactly the same. Same as ironfly. Butterfly is going to be same as ironfly, just that it is done using either with calls or puts. It is going to be exactly the same. But let me explain. Any questions here? I am sure there wouldn't be any questions because the adjustments are basically as they were in straddles and ironfly. So it is exactly the same. But want to quickly jump in here because there are ways to do the same adjustments using the payoff chart. Suppose now we are in this trade. Let me take 28th April. I'll take 17.1, 17.2. I'll add 17.2 sell. Since the market is currently bearish, I'm using calls. So 2, and the hedges are going to be based on this again, 300 points or maybe 260, so 250 in this. That will be 400. Buy call. 17.4. So this is your ironfly. This shows a little bit down because we use bid ask. So here in this case, the bid ask is a little bit wide. So that's the reason why it has taken. It takes the worst price. You can change that to LTP also if you want manually when you enter the trades. But this is a lot more realistic because bid ask is what you would get. So this is the way it is. Here, what I generally do is for butterfly, whichever direction I think the price is going, based on, I use Keltner channel. So based on Keltner channel, whichever direction the price is going, I just tilt my trade in that direction. And how do I do that? Is first thing is the sold strikes are increased to 3, and since the trend direction is down, so the top one here, I increase one more. So basically 2:3:1. 2:3:1. And since price is going down, so this is the way I adjust it. And I leave it this way. Because downside is obviously limited in this case. And upside, I'll adjust it further as if price goes here, I can adjust this further and increase the profit over here. And I can manage it that way. I don't need to worry about the downside much over here. So the direction, and if the direction was up, then what I would do, instead of making this 2, I would make this 2 lots or multiple of 2 lots, and this as single lot. So 2:3:1. In this case, for downside, it is going to be 2:3:1. Basically, if market is going down, then the higher strikes are going to be more, because basically this is what is this? This is a credit spread. Basically, this is a credit spread. So I'm adding more call credit spreads on the top. So my delta is going to be negative that way. More credit spreads on the top and only a single debit spread at the bottom. So that is the whole idea. And if prices are going up, if I'm using call, then I have here 2 debit spreads and only a single credit spread. So then the delta will be positive actually. Now there's a friend who trades with me and he asks me about this a lot. And what he does is he feels that whatever direction he comes up with initially when he enters the trade, either he's very nervous about it or he feels that he is always wrong. So what I had told him is, fine, you tilt the favor your trade in this particular direction, but then neutralize this delta. So let me add to neutralize delta, I need to buy out of the money call with 19 delta or 0.19. So I mean, this is a very not a good thing to do, but I'll just tell you what his idea is, so you can decide if you want to use it or not. So this is going to be 427. Okay, this is almost the same, 0.1896, so almost close. So let me buy. Here, the idea is obviously it is open on the upside, but the main idea for him is he's very happy because his blue line, which is the T+0 line, is flat now. That is his main idea. So he feels that he needs some more confirmation. He feels that fine, I'm initiating a trade here and the market is going down, but I still want to remain neutral. So this is what he does. So and now the line is flat. I mean, even if market like gaps up, like goes say 200, 300 points over here, say maybe goes up by say 1% or even 3%, he's fine. I mean, 3% is very fine. He's very fine. But if he's 1%, then he's only down by what? About 583 rupees if he's trading this many lots. So only that much. And if it goes down also, he's fine because the line is flat. And once he gets a confirmation over here and market goes down, then he's fine. And then he'll probably just remove this. He'll just close it off for a loss and that's it. Then he is confident that his trade is going in the right direction. And then he'll probably continue with the trade like this way. Because then he closes off. Because of course, he'll have to take some loss in this. And then he can continue it this way. And once this happens, once you, let me reset this. Once the price moves from here to here, beyond this particular point over here, further adjustments can be done. You can either move the lower strike that was there. You can either maybe these 3 strikes that you have sold, basically this. Now, if market has gone somewhere here, then there's no point because this 17.2 call would have lost most of its value. So then you can get it down to 17.1 and 17 maybe, and then you can see maybe strike 1 or 2 strikes down, and then your profit potential goes up here significantly once you get this down. So you can experiment with that. So any questions about this, especially positioning this, basically positioning this in the direction of trend basically. And if you can take this a little bit loss going against your trade, then make sure that this whatever, say 1%, 2%, maybe you can expect the other way. And this 3,000 rupees is fine. If it is fine with you, then you can take this kind of a trade. Otherwise, just stay neutral. Don't do this in this kind of a ratio. But I like to stay in one direction instead of staying neutral. For neutral, I have iron fly anyway. So these are my directional trades. I have described this in one of the earliest videos also, exactly how I would do that. I mostly was using monthly expiry at that time, but I currently use weekly expiries also for trading this. You have to be, if you know, I mean, some kind of direction, you have some feel for some direction, or you think this could be the direction, then you can initiate something like this. If you think it's going to be neutral or sideways, then there's no point doing this. You can as well stick with iron Condor, or you can stick with iron fly, or just a butterfly.
Sir, hello.
Yeah.
So in a previous butterfly, you had explained in that the hedges and the wings, the gap was less. In the hedges, there was 200 points, and that side that was 300 unbalanced type. So which one is better? Both side wings same distance, or the hedges like it was 200 and that side that was 300 distance?
Oh, in which one was it? I might have done it
Butterfly.
in this payoff chart only, or which one?
No, sir, the previous video which you had done on butterfly before.
Oh, okay. Yeah, I mean that was starting neutral, or yeah, that is also that
was
fine.
Tilted towards the direction in the start.
Yeah,
right?
exactly. See, that is fine. How you tilt in the direction is up to you. So you can do this. See, let me make this 2 and this one. See, what you can do is, this is a normal neutral one. But in this case, what you can do is, now since I'm bearish, what I will do is, see, 200 is the gap. Instead of that, I will get this. Yeah, I think this is what I had done at that time. I used to do, yeah, this is also there. This is one other way of doing it. So basically, between your sold and your lower hedge, the gap is only 100. And then higher hedge, your gap is 200. So this is other way of doing it. You can either have the ratio, or you can tilt. Basically, it's the same, because if you see, this is a lightweight one, because basically you are putting less money in this. Your delta is going to be negative. Delta is going to be lesser risk. Yeah, you can do this also. This is another way of doing the tilt. The other way is you keep the distances same, but then you do a ratio. That also is there. So either way is fine. Either way is fine.
Okay, sir. Thank you.
Yeah.
How to find the direction? I mean, is there any separate setup you are using?
No, this is what I use. Keltner
Okay.
channels. Yeah, that's it. And this is only to get the initial. Of course, you see, once here I got a bullish signal here, and then again a bearish signal here. So basically, you would have to do the tilt your. You keep on adjusting over here. So then if you have something better than this, this also was a whipsaw here signal. This whipsaw signal here also.
Yes.
So you get most of the time it is fine. Or you can, if you're doing this as a positional, you need not be in 15 minutes. You can go to hourly. Hourly, you will get much better. Of course, your signals are going to be late, but it's fine. I mean, when it is in the process of changing the trend here, you might get 1 or 2 adjustments. So you can do that. And here you will actually,
for
change
intraday
it.
and hourly, that 53 only you're using Keltner channel settings.
Yeah. Positional intraday, I use stick to the same one. I just adjust the time frames. That's it.
Okay.
Yeah.
Okay.
Yeah. Any other questions?
So just one thing from my side.
Yeah.
For someone who would want to learn as we go, which kind of strategy would you recommend, looking at less number of adjustments, even if that would mean lower return on investment?
less number of adjustment is probably, it is going to be difficult. See, option strategies, you almost, iron Condor that we discussed even after the volatile move that we saw had only a couple of adjustments. So at least that many adjustments are going to be there, because otherwise then the only other way is to use credit spreads, where what you can do is, so once you get a bullish signal here, you short over here and then you buy a hedge here. So then there are absolutely no adjustments. Once the price moves in your direction over here, you have captured about 70%, 80% of the credit by this time. You just close the credit spread. And then you initiate another one with a strike price below this band over here. Same. And then have a hedge here. So as the market is moving up, you keep on adding credit spreads, and then you keep on closing those once you are able to capture, say, 70%, 75% of the credit that you have got. Then once things change here, you can initiate a call credit spread here above this band here, and then have a hedge here. And keep doing it. You probably will capture it here, the 75% of credit, then you sell another one here, over here, and with, again, your premium also will be good over here because of the volatility increase. So this, have a hedge here. This is, I think this would be the most simplest one, but you would have some kind of, you need some kind of a directional indicator, directional system, where clearly it gives you clear-cut buy-sell signals. So you know how to position your credit spreads. So this way, on 1 hour Keltner, you can do this comfortably. You can do it. So I think credit spreads would be the ones without adjustments. I mean, the only adjustments, there is no adjustment. Basically, you either close. Suppose you've initiated a put credit spread over here with somewhere here and a hedge here, and then a market breaks this level over here, then you would just close this at a loss. Basically, you are closing all these on profit, then this one will be on a loss, and then you initiate a call credit spread. So you're only initiating and closing, capturing profits. That's it. This is the only thing you need to do. Then adjustments are not involved over here.
Clear, sir. Thank you. That helps. Thank you very much.
Yeah.
So these are the monthlies, or we should do in weeklies, these credit spreads?
Weeklies are better, I think. Weeklies are better, even though don't do it maybe obviously on Thursdays you won't do it, but Wednesday also late in the afternoon, don't initiate for the coming expiry. Go to the next expiry. So you have, because anyway premiums also will not be there, so anyway you will go to the next expiry. So weekly is fine. Weekly is fine.
These hourly signals would help in weekly. This hourly first hour breakouts.
Definitely. Yes.
Oh, thanks.
Okay. Any more questions?
Srikanth sir, one question from me. Any adjustment for Strangle?
Strangle, it will be very, very similar to what we discussed in Straddles, and basically using the strategy charts. It is straightforward. I mean, that the moving strikes is the only way you can do it, because only with payoff you have other ways of doing the adjustments. In this case, it is going to be exactly similar to straddle charts. The only thing is that the strikes are going to be different, because while adjustments also, we went into strangles, we got into strangles also. But yeah, of course, you'll be positioning it as a strangle from the beginning itself. So that is going to be the only difference. But the adjustments are going to be similar. Once a strike is stressed, you just move that strike, or basically, or the other way around also you can do, because these are going to be wide, very wide away from the current price. So instead of, if market has gone down and put strike is stressed, so you can maybe try adjusting the call strike, bringing this down first if required. So the adjustments may be slightly different, but the idea is going to be exactly the same for straddles and strangles, keeping the price below the band. So adjust the strikes, adjust it here, and see what adjustments you'll have to make to get the price down, and then just do that. That's it.
Can we use on the Bank Nifty also the setup?
Yeah, you can use. Yes, it will work. It will work.
Sir,
But
on the
yeah,
calendars.
calendars. It's going to be
No,
the
sir.
same. Yeah.
Yeah, calendar spread. You bought the monthly one and sold the weekly, right?
Yeah, that's right. Because
So
yeah,
every week we could just keep the bought one same, or we should just shift with the strikes, or we can keep that
you
and
can keep the same one as long as it has not gone too far away.
okay.
So as long as it is nearby your current market price, you are fine. I mean, even if 100, 200, 300 points here and there, it is fine. So only if it goes like 500 points away and all that, then it does not make sense to have that. So then you can close that and initiate another one.
So, and the butterflies, are you doing on Nifty or Bank Nifty also? Is butterfly working on Bank Nifty? And the strike selection?
I have not tried in Bank Nifty. I do it in Nifty only. I've been doing it for years now, and I do it only in Nifty.
Oh,
I've not tried in Bank Nifty, but I don't know why it should not work. I mean, it should be fine. It should work actually. But
the strike selection of the wings should be the same way.
Same.
ATM.
Yeah, that is the same, because keep the straddle width, because that is going to be the two standard deviation suggested move until the expiry anyway. So it is a very standard calculation, and 68% of the times you are going to be right about it. So it is fine. So use that consistently. So you will be fine. Yeah.
Thank you, sir.
So just out of curiosity, you do Nifty because it is less volatile compared to Bank Nifty?
I think so. Yeah, maybe I've got used to it. I don't know, but yeah, I think that initially that was the reason why I did, because time is one of a constraint. I generally trade positional only because I don't get time during the day. So intraday is mostly out of the question, and I don't want to monitor too much during the day. So positional Nifty is very comfortable. I just look at it about, say, once or twice a day, and that's fine. So that is the reason why I have got stuck to Nifty. I have not gone to Bank Nifty much, but it should work. I should be able to do it comfortably.
And so in terms of returns, it's more or less the same, or Bank Nifty is much more lucrative?
Bank Nifty may be a little bit better. If you adjust properly, I think you get premiums. You get a lot more when the premiums are inflated. You get more in Bank Nifty, and then time decay also happens very fast in Bank Nifty due to the same reason, because volatility crush and volatility explosion, both are more in that due to higher volatility. So yeah, if you can make the adjustments properly, I think the profit potential is a lot more in Bank Nifty.
Yeah. Thank you, sir. Thank you.
Yeah.
But sir, in Ironfly, your IVs doesn't make any impact, right?
Not much. Yes. But yeah, but your once adjustments are done, so they still matter, because you do have a hedge. But I'll have to check, because IVs, you're moving the strikes and you're always close to at the money. So there could be some impact. I'm not sure, even though of course hedges are there. If one side hedge goes too far away, volatility might come into the picture. It depends after one or two adjustments.
One more question, that if I initiate one credit spread, and if it gets into the loss position, then what could be the adjustments? I should close it and initiate another one based on the setup?
Yeah, that's the best way to do it. If you are following this, basically using a trend indicator and initiating in the direction of the trend, the best way is to close it off. Don't bother adjusting credit spreads at all, because already, yeah, you get very less premium, and then if you try to adjust and then go into more of a loss, increase your loss, then it's not useful. I mean, not good for the psychology also. Best is have a loss limit in mind, and once that loss limit is hit, just exit, and that's it. Just initiate another one in the direction of the trend. that will be the best thing.
हेलो सर.
Yeah.
सर एक क्वेश्चन है सर. एक लॉन्ग कॉल बटरफ्लाई और एक पुट लॉन्ग बटरफ्लाई की स्ट्रेटजी सर, कोई इसका चार्ट हो सकता है सर?
दोनों का मिला
डिफरेंस का, डिफरेंस का सर. बिल्कुल बिल्कुल सर.
लॉन्ग कॉल बटरफ्लाई
वेरी इंपॉर्टेंट सर.
नहीं, क्या बताया आपने? लॉन्ग कॉल बटरफ्लाई और
एटीएम की लॉन्ग कॉल बटरफ्लाई.
हाँ.
और एटीएम की ही पुट लॉन्ग बटरफ्लाई.
ओके.
इसका डिफरेंस की स्टडी सर. डिफरेंस होता है सर इसमें?
हाँ. अच्छा, इसका डिफरेंस का स्ट्रैटेजी चार्ट तो बनाया तो नहीं है हमने, बना सकते हैं, लेकिन ये क्या क्या यूज है इसका मुझे तो आइडिया नहीं है. मैंने कभी
इसका बहुत मतलब इससे ट्रेंड को हम पहचान सकते हैं.
अच्छा, ट्रेंड को पहचान, उसका जो स्प्रेड है, जो डिफरेंस है उसकी.
बिल्कुल.
ओके.
कोशिश करें सर, मतलब वेरी वेरी इंपॉर्टेंट सर.
ठीक है, मैं इसको मैं, मेरे पास एक मेथड है, मैं मेरे प्रोग्राम से ट्रैक कर सकूंगा. इसको मैं ट्रैक करता हूँ एक बार, और फिर अगर इसमें वैल्यू हो तो फिर मैं करता हूँ इसका
100% सर.
ओके. ठीक है सर, मैं देखता हूँ सर, इसका वेरीफाई कर लूंगा जी. मुझे एक बार बाद में एक बार टेलीग्राम पे याद दिलाना, मैं टेस्ट कर लेता हूँ इसको.
मैंने मैसेज किया सर.
ओके, ठीक है.
सर काफी टाइम से मैं काम कर रहा हूँ, 15 साल हो गए मेरे को.
ओके.
तो मतलब कुछ पता लग जाता है थोड़ा बहुत.
ठीक है सर, मैं देखता हूँ, जरूर देखूंगा सर.
सुशील नाम है सर मेरा.
ओके. ठीक है. और कोई questions, any doubts, any queries? Now what should, okay, that was the whole thing. I mean, about strategies. These are the strategies. Now any other questions you have, I can take about any other tools.
So if we still have time, one last thing from my side. When we make the hedges for strangles, do we make it inside or outside the strangle? The hedge we do inside or outside?
Okay, that is, you mean iron condor?
Yeah.
And but with inside edges or outside, or the regular iron condor which is outside edge?
Yes, sir.
See, inside hedges, they are more effective if you obviously they are more effective, but then it becomes a debit trade if you initiate the same number of options, obviously. So people, what they do is they call the kind of Batman trade or whatever, where you initiate fewer number of contracts when you are trading inside hedges. So that may be effective. Then you need to be good on your adjustments, because if you get a big gap, then you're one or two contracts short of the hedges, then it becomes a problem. But in general, inside hedges, of course, will be a lot more powerful, because you will be able to manage those much better, because it is a much better hedge compared to outside hedges, obviously. So this is my thought about it. You would have to really take advantage of that trade. You would have to initiate fewer hedges. If you're trading 10 lots, maybe I don't know, 3 lots, 4 lots of hedges inside. Maybe there you can do that. Generally 1:3, people do 1:3, or if you want to be safer, 2:3, only 2 hedges, whereas 3, I think 1:3 is what people use a lot in that. But then obviously it is risky in case of a big move. So you would have to be careful with that. But adjustments are also simpler, because your one single hedge will be a lot more powerful, because it will be able to hedge a couple of options instead of a single option. So you can try that.
Thanks, sir, because I was not aware about the 1:3 ratio. That's a good insight for me. Much appreciated, sir.
Yeah, you can take a look at that. Experiment with the ratios. So because 1:3 is more riskier, and as you go, say 3:5, is much decent. So for many people do that 3:5 also. So you can experiment with hedges. Once you put it on a payoff chart, you will know, and you can look at the deltas and all that. And as price moves also, you can monitor the deltas. Just paper trade and watch how the deltas move and how a profit and loss moves. Then you'll be able to know how to make adjustments. And adjustments are much easier with inside hedges. You'll find that. Okay, any other questions?
Thank you, sir. Thank you.
Yeah.
Srikanth sir, are credit spreads better or debit spreads better?
See, basically, synthetically, if you see, they are exactly the same. If the profit and loss is going to be exactly the same, it is only where you're positioning it is different. So basically, I don't think there is much difference. You can trade anything. I mean, if you see, suppose here on this, if you have initiated 15.9 and 15.7, 15.9, 15.7. So whether credit or debit, you are going to get the very similar profit profile. But the thing is, it is basically theta versus making theta or losing theta. Basically, that is the whole thing. But if you are they are almost the same. If you initiate, as I said, the example, say 16 and 15.8 over here, and this is a credit spread, credit put spread. Now, if you have a debit spread of the same strikes, you're going to get exactly same profit. You can put that in payoff and check. Of course, now if you say that no, I'm not going to do that, instead of a credit spread over here, put credit spread initiating over here, I'm going to have a long here and a short here, then that is completely different. In that case, versus credit spreads here, of course, then you would have to do lots of adjustments and all that. It gets a little bit complicated, because here, once the market turns down from here, then you'll be losing a lot more. And here in this case of credit spread, you'll be able to just quickly close and just initiate a call credit spread over here to capitalize on the down move. But here, then you have to take a bigger loss and then initiate a put debit spread over here to capture the trend from here. So that's the thing. I mean, it's, if you want to capture theta, just stick to out of the money credit spreads. And if you, of course, if you are more adventurous type, you want to go for higher profit, then initiate a at the money debit spread, or maybe slightly in the money debit spread. But then the way of managing it is going to be very different. You have to remember that. So it is again based on your preference now. So what you want to do, whether you like adjustments, you want to do adjustments. If you don't want adjustments, just stick to credit spreads, like what I have explained. If you like adjustments, and then you take debit spreads and then do the adjustments. There are many adjustments. I mean, you can have a big wide debit spread here, and at this point, when the trend starts to move, maybe at this point also, when you think it has gone sideways and the trend is maybe turning down, you can hedge here by have shorting a credit spread over here. So this will then, the whole thing will become a butterfly, and you will be making money here. Once the price breaks out above, again you can close that credit spread and ride this debit spread back until here. Again, initiate a credit spread here and make this into a butterfly again. That also, people do that. I mean, whenever they have a debit spread and market is turning against their position, they convert it to a butterfly. Then it is a sideways move from there. Many times, once you convert, when you have captured a little bit profit here, you are into profit over here. And when you short a credit spread here, the whole trade will become risk-free here. Then you can maybe, you can wait till here and see if it closes on the same level here, and then maybe you can capture more profit here. So there are lots of things you can do with debit spreads, because then you need to know what to do, what kind of adjustments to make. If you don't want to get into all these complicated things, then, and you don't, or if you don't have the time and all that, so just stick to credit spreads. They'll be a lot more simpler. Anything else? So let me stop the recording now.